All right, it's that time of the month again. We are going through the previous month's market data, giving you an update on the market so that you know more than anybody else in your friend group all about the real estate market. They're going to start coming to you for all of the answers. So this is just in Midland County. This is just residential homes, and this is just pre-existing homes. So basically, I'm excluding any vacant land or new build data. So August 2023. Got some interesting stuff still going on. So if we go to the charts, you will look. Well, I always start at the average sales price. So you see here, up 14.1% year over year for the month of August. So our average sales price is still going up. In the long-term year over year, you'll see August last year, we were at 243 for an average sales price in the county. Now we're at 277. So 14% growth year over year for the month of August in terms of average sales price. So we're still seeing prices go up. That sounds a lot like low inventory to me. So new listings for sale in the market is down. So again, the inventory is way down. So we're down 12.5% year over year for new listings coming into the market. So in the market in Midland County, we listed 139 homes for sale last year in comparison to last month. In comparison to August last year, we did 159. So, again, inventory deficient, prices are going up, they're remaining up, and the amount of listings are going down. So homes for sale are, total homes for sale 117 in the month of August, down 5.5% from last year. It was at 124. So the amount of closed sales. So this is one thing that I find interesting. In August, now remember, we listed 139 homes, right? In August, we sold 143, so we are literally selling more houses than we are listing, which is crazy. But even still, down. Closed sales are down 3.5% year over year in comparison to last year at 148 listings sold in the month of August. So again, you're seeing the recurring theme: low inventory, high prices, and it's kind of staying that way. I am going to show you some data points that are going to show you that the market is still healthier than you think, as long as you're not a real estate agent. But only 3.5%. Down in terms of closed sales. Days on market, here we are, 16 days on market as an average. So this metric is actually going up. So actually, houses are staying on the market for a little bit longer than they were last year. You can see last year, August of last year, the average days on market was 14. The average days on market is 16 in the month of August 2023. That's up 14.3%. Month supply, absorption rate, the amount of time that it takes based on the current supply and demand trends for every house in the market to sell. So you can see, again, record lows as it relates to this. Last year, we were exactly 1 month. Supply this year, we are at 1.2 months. So basically 1 month and a week-ish. So here we are, we're up 20%, even though it almost doesn't matter because we were so low on inventory last year. But actually, I guess kind of surprising based on what else we've seen in terms of these metrics, to see that the inventory right now is actually up. But that's probably because some of the buyer demand is getting crushed down by rising interest rates. But that's where we're at with the absorption rate or the month supply. Here we go with the percentage of list price. So here's another thing that you're seeing. Last month, 102.6% is the average discount, meaning that on average, buyers paid 2.6% more than the initial listing price to buy a house. So again, that's showing us the same theme, that prices are still staying up. They're almost stable at these high prices. So last year, you can see in August, it was 1.8%. So it's actually very marginally up. I'd call it flat in terms of the average discount. So That's an interesting metric as well. And then the last one that we're going to see here is the average price per square foot is up 14%. Gee, that looks a lot like another metric that we looked at right here, 14.1%. So again, answer your question. Are the value of houses going up? Are they going down? Are they flatlining? They're still going up. And they're still going up, as a matter of fact, by a metric of approximately 14% year over year, at least in the month of August. So interesting metrics. So let's keep going. Today I'm also going to show you another one. This is called a target market analysis. So what you're looking at here is a graph that is showing you the amount of showings in any given price range. So each one of these bars represents a price range of $50,000, starting at $50,000 and going up to $1 million, because let's face it, we all know that in Midland we don't have many houses that are listed over $1 million. So this will give you the bulk of the data, and this will really give you an idea of where the market is the most active. And as you can see, it's incredibly clear on this market. So again, this is only in Midland County. And only the month of August, but you can see right here between 150,000 and 250,000. That's where 40%, if you look down here, 40% of the buyers are shopping in this range, literally almost half. If you add and go up to 300,000, you get 52% of the market is in that $150,000 range. So between $150,000 and $300,000, that's where a bulk of the buyers are. So if you're a seller sitting on the fence and you think that your house is probably going to fall somewhere in that range as it relates to your pricing strategy, this is a very active market. You can see that the higher we go in sales price, the pond doesn't have as many fish in it. There are just fewer buyers at that price range. That's what I'm seeing. You know, I don't think that it's necessarily that those buyers are less active. I just think that pool has a lot less, or that pond has a lot less fish in it. But you can see right here, 296 showings between 150,000 and 200,000 just in the month of August, just in Midland County. 253 showings, 173 showings. What are we looking? 700 showings in just that range of prices in just 1 month. So the reason that I found this interesting is because that is showing that the market is still quite active. There are still a lot of buyers out there, and those buyers are still active. And as a matter of fact, they're still driving the prices up. So if you are a seller that's sitting on the fence, I don't know. I don't know that I'm sitting on the fence after looking at some of this data. On to the last thing, and that is the 30-year mortgage rates. So what you're looking at here is a reflection of the past year. So right about here is the past month or so. So you can see up until now, we kind of maxed out this previous high right here at this 737-ish mark, and it was showing some kind of resistance and beating the rates back down. But you can see after we kind of tested that 7 level again, we broke through it. And as a matter of fact, we even broke that high all the way up to about 7.5%. But we did see kind of a major rejection off that 7%, 7.5%. And it kind of retraced back. So I'm not sure what they're going to do. All I know is that they broke that high with the mortgage rates this month. So we'll see. If I have to guess, which it would be a guess, I'm assuming that they're going to keep going up, at least in the short term. And I'm hopeful that they'll start to stabilize and retrace back somewhere in the 6 to 5% range. I think that would get that affordability index to be back, to where most people are somewhat comfortable, and that might get the amount of total transactions up. So that is the market data, quick, fast. Now you know everything. So tell your friends that you're the one to go to for all of their real estate needs because you follow Kev. So if you like this video, please give it a like, give it a share, and as always, thanks for watching.